Hello friends and welcome to lesson number 7. This is Agri sector policy and we are in 13th video of this particular lesson. Up until now friends, we have studied a lot of topics under the agriculture sector policy. For example, we have studied about the various kinds of farm subsidies. We have studied about the public distribution system. We have studied about the National Food Security Act. We've studied about the DBT, which is the direct benefit transfer. Then we also studied about crop insurance, Pradhan Mantri Fasal Bima Yojana. This is a very broad topic friends and very important topic also. If you look at the UPSC mains question paper, you will see that almost every year 4 to 5 questions will come from agriculture and agriculture sector policy, these two topics. So it becomes very important in terms of weightage also. And also later on when you work in the field as an IAS officer, you will be working in these sectors for the development of agriculture. You will be actually running and implementing a lot of schemes on the field, and therefore it becomes important from that point of view also. In this particular video friends, we will focus upon the role of cooperative societies in rural credit, and ultimately how it helps the agriculture sector actually. So rural credit meaning the credit which is taken for agriculture purpose, right? So it may be to purchase seeds, to purchase fertilizers, or to purchase any agriculture equipment. So people take loans, the farmers take loans from various kinds of sources. So one source is of course the informal source, like from money lenders and local sahukars, but the second source, which is the formal source of credit or loan, is through the banking institutions or through the cooperative societies. So cooperative societies play an important role when it comes to providing credit or loans to the farmers, so that they have money in their hand to purchase seeds, to purchase fertilizers or other agriculture inputs, right? And why cooperative societies become important? Because because of 2-3 things. So one of them is the easy access. So basically cooperative societies are located at village level, and therefore it is easier for farmers to access those societies or those institutions. A bank may not be available in every village or every gram panchayat. So there may not be a bank branch in every gram panchayat or every village, but cooperative societies are present, and therefore they provide financial instruments for farmers to either to take loan or to make deposits, etc. So therefore cooperative societies are very important from that point of view. The second reason is that cooperative societies are run on cooperative model. The name itself suggests that they are run on the cooperative model, meaning they are run by the people who are elected to the body of cooperative societies, and therefore it is expected that they work in the favor of or in the interest of the farmers or the members of that cooperative society. So that is the intention with which cooperative societies were actually formed in our country. Also the cooperative societies work for various other purposes, like in providing of seeds, fertilizers, other agricultural inputs, extension services to the farmers at the village level. That role is also performed by them. In this video, we'll focus our attention mainly on what is the role of cooperative societies in providing the rural credit. Okay, so how they provide rural credit. Definitely there are issues, challenges, that also we will see, and how it can be made a better model, right? That is our ultimate objective here. So let us first understand the background. The historical context is such that in pre-independence time, that is before independence, farmers relied heavily on money lenders, the local sahukars, who charged 30 to 50% interest per annum, leading to debt traps. Okay, So farmers used to be heavily under debt because of these local money lenders, and cooperative movement began in 1904, before independence only. And Cooperative Credit Societies Act was also passed to provide affordable credit to the farmers. Affordable credit meaning which will not charge this much high interest. The interest may be minimal, like 7%, 10%, 12%, okay, per annum. So in order to provide affordable credit, that was the original intention. The purpose was that to provide short-term crop loans, agricultural inputs, seeds, fertilizers, and storage facilities also. So these are the various functions which the cooperative societies perform. Also to promote collective bargaining and financial inclusion in rural areas. Financial inclusion because the cooperative societies act as banking institutions only. They can take deposits, they can provide loans, right? And they also help farmers with Pradhan Mantri Fasal Bima Yojana, and also provide collective bargaining to the farmers, because through cooperative societies they can bargain in the mandis, right, in the agricultural mandis. So that is the original purpose of cooperative societies. How it is structured? It is basically a 3-tier system in our country. So the lowest bottom level of this 3-tier system is the primary agricultural credit societies, which are PACS PACs at village level. Then there is a district cooperative bank, DCBs, and state cooperative bank at the state level. So this is the hierarchy. Here there is a village level, here there is a district level, and then at the top is the state level. So this is the hierarchy, and these are under the administrative control of each other. So the state cooperative bank will control the district cooperative banks in the state, and then this will control in turn the village level societies, and they are linked to NABARD for refinancing and policy support. Okay, so NABARD does refinancing, meaning it provides finance to these banks to provide loans, further loans, and policy support also NABARD does. Policy support meaning as to what percentage of loan should be given for seeds, what percentage of loan should be given for equipment, what percentage of loan should be given to farmers for such purpose. So these are the various policy parameters which NABARD provides them. Then let us look at some of the key data. 1 lakh packs serve 13 crore farmers in our country as per the NABARD report of 2023. And cooperatives disburse almost 20% of agricultural credit in our country, almost 2 lakh crore annually. So it is a very huge amount. Okay, so this is the importance of cooperatives. This data you can use in your answer writing also. Then let us look at the contributions of cooperative societies. The primary agriculture credit societies PACs, they provide short-term loans of 10,000 to 50,000 rupees at 7 to 10% interest rate, far below moneylender rates. Supply inputs and market produce, reducing middleman exploitation. NABARD linkages. NABARD refinances PACs and DCBs, district cooperative banks, ensuring liquidity. Kisan credit card scheme integrated with cooperatives, almost 7 crore cases is issued by 2023. So Kisan credit card is a credit card given to the farmers through which they can directly avail loans, okay, crop loans. Then there are dairy cooperatives also. Example is Amul. Gujarat Cooperative Milk Marketing Federation model collects milk, processes and markets, benefiting 36 lakh farmers. So cooperatives not just provide loans, but it can also do other functions like here milk collection, processing of milk, then marketing also, so that there is a overall supply chain, overall business chain, value chain. It contributes 25% of India's milk production, 210 million tons in 2023. So this is a success story, a best practice model in our country. What is the economic impact? Cooperatives enhance financial inclusion, reduce rural indebtedness and stabilize incomes. This is but obvious. And PACs in Punjab increased farmer incomes by 15% through timely credit as per the NABARD report of 2022. So very, very important data here. You can quote this. But there are constraints and challenges. So what are these? Let us look at them. Over politicization, we know that already we have seen that these cooperative societies has a body or a committee which is elected by the people, and therefore some politics is involved. So the local leaders, the local politicians, they try to dominate these societies and they are often controlled by local elites, leading to favoritism in loan disbursal. So that is one problem. Non-performing assets is another problem. High NPAs of 10 to 15% in some states due to loan waivers and mismanagement. Sometimes there is evergreening of loan also. For example, there are 10,000 farmers in a district who have taken loans from various societies. Say the overall loan that they have taken is of 10 crore rupees. Okay. Now what will happen is that the next year this same 10,000 farmers, they will not repay their old loans, this 10 crore, but this loan will be renewed, okay, in their names. So the loan will be reviewed and they'll just pay the interest amount. Say for example, interest amount is 1 crore rupees. So they will pay this 1 crore rupees together, and this 10 crore they will not pay. The principal is never returned and it gets renewed. So it is evergreening of loan, and there is a fear that they might never return the principal amount. Okay, it will just keep on evergreening. So that is a problem, that is a kind of mismanagement that happens. Then weak governance, another problem. There is a lack of professional management and transparency in many cooperatives. Limited capital base, their capital base is limited. PACs rely heavily on NABARD refinancing, limiting scalability. So they don't have much deposits on which they can do the business, unlike other commercial banks. Then regional imbalances are also seen. Strong presence in Gujarat, Maharashtra and Punjab, but weak presence in Bihar, Jharkhand and Odisha. So there is a regional imbalance also in our country. Competition from banks is there. So the commercial banks like HDFC, ICICI, State Bank of India, right, other commercial banks and other microfinance institutions, they offer faster service, reducing cooperative relevance. Okay, so they also are competitors and they also want to disburse loans to farmers. However, the number of branches and the access in rural area is limited. Therefore, cooperative societies become important. Then let us look at some reforms from the technological point of view. Core banking solution, CBS for PACs to digitize transactions. 30% PACs digitized by 2024. Core banking solution is the is a kind of software or system through which the banking system is interconnected, and transactions are recorded. If you transfer money from say SBI to HDFC, okay, and there are lakhs and crores of transactions taking place like that. So those are recorded on the core banking solutions, this system, and the PACs are also getting integrated in this system so that there is transparency and transactions can happen digitally. Okay, and almost 30% has been digitized. This is a big mission which the government has taken now in order to digitize the PACs, so that there is transparency and we'll know how much this loan evergreening and mismanagement is happening. That will also come out of this if the technology is integrated. KCC linked with Aadhaar and mobile apps for seamless credit access. That is basically Aadhaar seeding and integrating your Kisan credit card with your Aadhaar. Fintech in rural credit, financial technology. Platforms like Agri, which is basically, I had told you, this is a database of the farmers, which includes their name, Aadhaar card, their address, their phone number, their Aadhaar number, their land details, what crops they grow, every detail. And fintech startups like XIII provide digital loans to farmers. Mobile apps enable real-time loan tracking and repayment. Then some policy reforms also. In 2023, the Ministry of Cooperation aims to strengthen 2 lakh PACs with multi-purpose roles like credit, storage and marketing, basically giving them some funds to develop infrastructure. NABARD digital literacy program for cooperative members. So they do on training so that people, the officers and the members of these PACs, they become professional and start practicing good banking and financial practices. Okay, let us look at the case study of Amul versus Maharashtra Sugar Cooperative. Amul success through farmers ownership, professional management and global branding, whereas Maharashtra Sugar Cooperatives failure due to political interference, NPAs, non-performing assets and mismanagement. 50% of sugar crops, sugar cooperatives are defunct by 2020. So this is the problem actually. See, if you do mismanagement, if there is political interference, then this kind of problems happen. What is the key takeaway here? The key takeaway is that cooperatives are vital for rural credit but face governance and financial challenges. Very, very important. Technology and reforms can enhance efficiency and inclusion, and Amul's success highlights the potential of well-managed cooperatives. So if management is well, if there is professionalism, farmers have a sense of ownership, and there is no political interference as such, so definitely it can become a successful model for rural credit and for farmer upliftment. However, financial challenges and governance issues are, if they are there, then definitely that institution or that organization is doomed to fail. So it is very important that we try to minimize these issues, this political interference, and try to integrate technology as much as possible so that it becomes transparent and people can actually see if any kind of mismanagement is happening. Okay, so with this we'll end the topic of cooperatives. We'll continue agri sector policy in the next video also. Thank you.